Back on Closing Bell, value has been outperforming over the past few weeks, with the group coming off its best month in more than a year. But my next guest says 2024 will be a year for the growth trade, and that investors should be looking beyond the mega caps. Joining me here at Post 9, Alger's Ankur Crawford is back. Welcome back.
Thanks for having me.
This is beyond, not instead of, the mega cap trade, right? Because you own a lot of the mega caps, right?
Yeah, it's beyond and not instead of. I mean, look, 2023 was what I call a discovery year. We discovered Gen AI, and the mega caps ended up having these discovery type moves in which they were the drivers of this Gen AI trade, but now they've been discovered. So there's still earnings growth ahead. The valuations we don't think are ridiculously stretched, in part because the numbers have come up so much through the course of the year. However, we have to see a market that is broader than just the Mag 7.
Do you still think the Mag 7, though, are going to have a good 2024? Like, what do you think the returns are going to be as well? I mean, they don't need to be 20% or higher for each stock, but are there ones that you still think have more upside than others based on what you own?
I think there is.
You don't?
I think there is going to be a bifurcation in the Mag 7, i.e., Microsoft, that has a definitive AI growth driver behind it right now, and we start to monetize Copilot, or NVIDIA, that really trades at and might I say, a measly 20 multiple.
Well, it is less than it was.
It is less than it was. I think those stocks can work. Meta, that has definitive product cycle drivers, work. Google, unclear. So I think what you end up seeing is a bifurcation in the Mag 7. And we talk about it being a stock picker's market. It's going to be a stock picker's market even inside of that Mag 7 group. Okay,
so let's talk about these beyond stocks, if you will. Quanta, why do you like it?
Okay, so before we talk about Quanta, one important thing, AMD today got on stage.
Oh, right. We just talked about that with Stacey Rascon.
Oh, so one of the things Lisa Su said, the accelerated data center market is going to go to $400 billion in 2027, a 70% CAGR. That is a huge positive for a company like Quanta Services, in part because if you think about the data center architecture, as we add more and more GPU compute, it is highly power intensive. I mean, there's some parts of our economy or of our country right now that don't have enough electricity to accommodate these big data centers anymore. So we're going to have a huge CapEx build. We think $160 billion of CapEx from utilities, more or less goes to $200 billion by 2028 to 2029. Quanta Services is a net beneficiary of that as they build the T&D.
Okay. What about Vertiv?
Yeah, so Vertiv also a net beneficiary of this changing data center market where the architecture is being revamped. They are a power management and thermal management company. And you have an environment where these GPUs run really hot, and you need to change the way that they are cooling. Vertiv is a key player in that market. They're gaining share, and they're growing content. 24
times I'm looking at their forward PE. That doesn't feel a little, I don't know what the historical average is on a stock like this, but how would you assess that?
Yeah, so we don't think it's a 24 multiple. We think that the guidance that they've given has been conservative. And if you look at just PWR's backlog, the backlog would imply a much higher revenue growth rate. They have a 30% backlog going into the end of the year for 2024. That's their 12-month backlog. So, that has to translate to revenue, and it's not going to be at the rate that the street has.
You're talking about PWR, not Vertiv?
Oh, I was talking about PWR.
What about Vertiv? I think that's the one I was referencing. It looked like 24 times to me. I don't want to confuse you or our viewers, but that's the one I was talking about.
Okay, so for Vertiv, I think same thing. They've given 8 to 11% type growth range over the next few years. We think that's conservative, in part because the data center market, we think, is going to accelerate at a rate that is going to surprise people.
What's your broader market call? Do you have one for next year, or what you think is likely to happen? Are you more on the bullish side?
I think next year is going to be tougher than it was in 2023. And in part because it's an election year. Election years always bring a lot of uncertainty. The consumer, it's hard to tell what way the consumer will break. Will consumer break, or will it hold to be resilient? And I think that question is still out there. We don't really know. You know, we keep pushing out this recession. Does it get pushed out to the end of 2024 as we go into the election? Who gets elected? So I think it's not going to be like an easy year.
Well, this year wasn't an easy year. I mean, it was anything but. It looks easy if you don't know anything under the surface. You look at the returns this year and you're like, wow, stocks have had a great year. They really haven't outside of the 7. Now, of late, they've certainly looked better, but you know my point.
Yeah, I mean, it felt easier, I think, than 2024 will be, especially if you had picked the right stocks. No wonder why you feel like that. I forgot of the stocks you owned, Microsoft, Nvidia. Of course you think it was easy. But next year it will be a different regime, and it will become more of a stock picker's market where you kind of have to find that needle in a haystack, and you have to be agile in your thinking because the data is going to dictate the direction of the market.
All right, I appreciate you being back. Ankur, thanks.
Thank you.
That's Ankur Crawford at Post 9.